But if I was to start again now, I would just look at it and go like, okay, what if the worst case scenario does happen? Can I still afford to own this property? Because there's going to be good years, there's going to be bad years along the way.
Welcome to The Flow, real estate and money show for people in Canada looking to understand the home buying process, to demystify real estate investing, and to make mortgage financing accessible for anyone. The goal here on this show is to help people understand ways to make their money work for them, get in the market sooner, and realistically, completely open up the box on how mortgage financing works. I'm Alex McFadyen, your host, and I can't wait to help get you into the flow.
First and foremost, a lot of people haven't been formally introduced to my previous podcast, and we've got a new one here, The Flow State, which we're so excited that you guys are joining on. And for those people who haven't been part of the previous podcast, you might not have met my friend Tom here from Toronto. Tom with your beautiful mustache. Well, for those who are watching video, you'll see it. And for those listening to audio, you need to go check it out. Tom, thanks for joining me, man. How are you doing today?
I'm doing good, man. I actually, it was funny. We had just recorded our podcast as well. And I was saying to the guest that we had on, I feel the same way talking to you. It's like, I kind of woke up this morning in a bit of a shitty mood. Played hockey late last night, woke up just feeling real groggy. All the things that could have blown up in my business happened yesterday. But talking to you, talking to the last people we were talking to, I feel like you can get energy from people. So I would say like, how am I doing now? I'm in a good mood now.
Let's go, man. It's all about that pug energy. You gotta bring it with you everywhere you go at all times, man. I'm stoked. Hey, first, before we get into it, did you guys win last night or what?
We won 2-1. Yep.
Let's go. There we go. Yep. So it's a good day. All right. Awesome, man. Tom, we did an intro separately. We're not going to get into a 5-minute dialogue of all the amazing things that you do and so forth. We know you kick ass and you're doing incredible things in Toronto, and we're very thankful, obviously, that you joined me today, man. So what the point of today's conversation is, there's a lot of points to today's conversation, is obviously we're going to peel back the onion a little bit on you and talk a little bit about your money history. We talked about that before, but the second thing is we want to kick 2024 off with a bang and really just help our audience and our listenership kind of create a shape of what they could do to be successful with the information we have in 2024. But before we do all that fun stuff, we need to obviously peel back the onion. And the way that I always like to start the show, as I told you before, is a conversation about money, man. Okay, so we're jumping right into it. So I'm going to do that. I'm going to jump right into this, Tom. And, in our previous conversation, I shared with you that most people I talk to on a regular basis have a really shitty relationship with money. Let's be honest. And that's for a lot of reasons. We learn from our families, our banks. There's not as much as we'd want. We see so much on social media. It's overwhelming. And if there's anything I've learned, the reason that a lot of people are the way they are today is because of past experiences. So what I want to know from you is, being in the position that you're in today, where did you originally learn about how money works? Like, who taught you about it originally?
The simple answer is I didn't have any formal education of how to actually do it. And I think like anybody, when you kind of go through the path of, if you're going to work for yourself, it's like, hey, well, in my first or second year, if I could just make $100,000, I'd be set and everything's great. And then you realize pretty quickly, even if you do that, running a business costs a lot of money. And in your industry, in my industry, we are recognized based on revenue, not profitability. It's revenue. And it's very, very easy to fall into the trap that I want to create more revenue and I will spend all these amounts of monies on these different ways of finding more opportunity to create that revenue, right? So it's like, I know several people that run $1 million businesses that they probably spend about $850,000 to earn that. And I'm like, that's not bad, but that's not a margin that I would want to work that hard to get to, right? And I can just tell you, my relationship with money is really interesting. Like I grew up kind of middle class, good area of Toronto. My dad was a principal. My mom was in sales of kitchen kind of Tupperware products and things like that. Like we had a great childhood, but we didn't have excessive things, right? And I'll tell you that regardless of where you get to in life, it's always like where I live now, we have a very modest house in a really nice area. And sometimes I'll go for walks and I look at these other houses and I turn to my wife. I'm like, what do they do? Like, how did they get that? Like, how much harder do I have to work to get that one day? Like it took me so far just to get to here. So I've certainly had nothing. I've had times where I think I have money and then I realize pretty quickly, oh no, this is not at all. And now everything is just based on the fact that once you've earned a certain amount, what can I do that puts myself in a position in the future that I can continue to have revenue coming in where I am not the number one source of where all that's coming from. And we can go into more depth on that if you'd like.
Well, so the one thing that I'd love to explain or break down. So you're talking about this as your experience, obviously being from a real estate agent to running a team, and now obviously focusing on trying to run a business. And we're talking about money, hundreds of thousands and upwards of $1 million, which for a lot of people is like, oh, well, that's an insane amount of cash to make in a year, whether that's revenue or profit or whatnot. It wasn't always that way for you, I'm sure, especially as you were transitioning into the beginning of your career. And, you talk about living in a nice area now, and you look around these beautiful homes and so forth. But I guess what my question really is to you, Tom, is for you, was money always something that in your mind was readily available to grab? Or were there experiences in your life where it was a little bit of a struggle and you were like, why does it feel like I'm spinning on the hamster wheel?
It's a good question. Like I certainly didn't find success right away in this industry. I've talked about this before, but my first 6 months in real estate, now I did start at 22 years old and I was living at home, right? So I didn't have expenses, but I think I had made $10,000 in my first 6 months. And I remember sitting there and just like looking at my bank and I was like, this isn't going to work. Like it's just like, I'm lucky I'm in this position that I don't have rent and I don't have all these other things, but like this just isn't going to happen. So no, the money was not readily available to me to go get it. That really changed over time. And then kind of the big thing for me, regardless of anything that you do in life, is like, okay, well, if you're in a sales environment, I believe sales is the only way to hack the system of life of you go get how good you are at what you do. If you can do it in an ethical way and you can help people, there is no ceiling. There's also no floor, right? You can go the traditional path and you can get an income, you can become an employee. And for a lot of people, that's probably actually the path they should go because they like to have that security. But then if you go that path and you don't like what your ceiling is going to be, well, you have a few different choices. You can learn new skills that will put you in a higher bracket, or you can then go work for yourself and start from zero again and kind of build it up, right? I do think that there was something about starting in an industry where I worked for myself. I put that in quotations because a lot of realtors call themselves entrepreneurs. I think that's kind of a load of crap for half of them. But I think I was just naive. It was like, oh, I can do this. Like having that belief that I could just make this work. And if it didn't work, because I didn't really have a fallback option. Like I went to university, I got a degree in sociology, but I certainly wasn't passionate about it. So I would say it took me 3 years to even think for a second, like, oh, I can do this again next year, or maybe I can build on this. Maybe I can have these things I never thought were possible, but no, it didn't happen right away.
Well, and to your point, there's a lot of people out there whose the career that they've chosen isn't, and let's be honest, not everybody enjoys or likes the sales world and sees that opportunity to have the endless ceiling. But you brought something up in our conversation, was that you at some point figured out that if you can level up your skills in different areas, you can still find financial success. In your mind, because one of the themes of our conversation today is really how people can find success as they look into 2024 and the future. So in your mind, what are some of the skills that you see people leveling up in that are not necessarily sales related?
Yeah.
That you think the average, and we say average just means anybody, could have success in? Like, what should they be looking at? What are the things that they should be doing?
Yeah. So I guess, you can look at what you currently do for a living and how can you up your income in that specific focus, right? Or you could potentially look at like, well, what new skills could I add that would create other income streams for me? And whether that's traditional things like buying investment properties, or GICs are pretty good these days, right? Putting your money into a GIC, that's a guaranteed return, right? You can do things like that. But for me, it's like most of the skill. Now I've paid people a good sum of money to join programs on coaching and mentorship, and that I would highly recommend to anybody, regardless of industry. I think some people think all that stuff's a scam. It's like, it's not. Or like if people say like, oh, these events you go to, and whether it's like Tony Robbins or whatever, anybody, it's like a big cult. I'm like, if a cult means a bunch of people trying to better in their lives, being financially free, like sign me up. Like as long as there's no Kool-Aid at the end, like I'm in, like I'm joining that. Right. That sounds,
I mean, I guess it depends on the taste of the Kool-Aid, but yeah,
yeah, right. Like as long as, that's what it means, like sign me up. So mentorship from the very beginning. But then if there's people that are like, okay, well, like I don't have the time or potentially money, because it's normally one of those two things. You either have time or money, depending on where you are in your career. This sounds so obvious, but like everything I've learned for video editing, which helped me make more videos, that helped me get more clients, I learned through something that is called YouTube University. And it's not a university that YouTube has. It's literally just going on YouTube, putting your phone on Do Not Disturb, sitting there with a pen and paper and learning what you want to learn. So I really think, as general as that sounds, it's like all the information is out there. Sometimes it's packaged better if you buy it in like a course form. But if I was stuck in where I am financially, I'd be like, okay, well, how can I do more? How can I get to a higher level of what I'm currently doing? Or do I need to add a second or third or fourth revenue stream?
Yeah. With what you have right now, and I'm 1,000,000% on the same page. I preach, brother. Listen, this is a format in which people come and listen to our podcast to obviously get financial information, education on the mortgage, the real estate, and the money space. And so I think this is the perfect place to be talking to people like that and vindicate the fact that they're taking the time and listening to this type of podcast versus something about T Swift right now, right? So thinking about, like, I really want to dig into some of the areas that are your expertise and really talk about as we move forward. I mean, as a region, you work in Toronto and you have a team that works in Toronto. So that area of Canada is probably where you're most familiar, I would imagine. Is that fair to say?
That's fair to say. And by the way, congrats on saying Toronto the right way. You didn't pronounce the second T. No, you said it the right way.
Oh.
Most people not from Toronto say Toronto. You said Toronto, which means like you've been here before, it. So honorary. Yeah. So Toronto, not pronouncing the second T, is certainly the market that I know best. Yeah.
Big deal. If there's one thing to take away from today, I hope that take that away. So that city specifically has gone, interestingly enough, in a little bit of a different path than, let's say, Western Canada and Vancouver area in terms of what's going on right now. But I want to focus on the part that's probably most interesting to our listeners, which is the investment consideration and what's happening in the real estate market and how it's changing the way that people are looking at real estate as an investment, in particular in Toronto. So when it comes to real estate as an investment, I know that I'd like you to tell your story after this, but right now, what do you think is the primary reason for the dynamic shift, and how are people thinking about real estate as an investment in Toronto right now? Maybe just answer that question.
Yeah. I'll say, first of all, like if you're looking to invest in the city of Toronto or Vancouver or Calgary, I don't care, anywhere in North America, if you're not going to own that property for at least 5 years, the answer is just don't start. Right. So I think we'll start there. I think with interest rates remaining low until beginning of 2022 for a decade, we saw some fairly substantial, probably not healthy growth patterns in Toronto, in Vancouver. Like the rapidness in which the real estate prices went up was way above the 40-year trend. I think the 40-year trend in Vancouver and Toronto is about 6.5% a year through all the good and all the bad. But the last 10 was probably like over 10% a year, right? Like it's really, it's not probably. So if you think because it happened in the future, it's going to happen again, like it's not. The next 10 years is not going to be like the last 10 years. I don't believe, even if interest rates, if Bank of Canada gets back to 3.5% overnight rate, the market will pick up again, but it's not going to the wildness of what it did. You're not going to borrow money at, 2% anymore. It's not happening. And I think when people invest in real estate, and frankly, they've been spoiled for a decade in Toronto and Vancouver. If you owned real estate, you were spoiled as an owner. Now, and potentially a seller if you sold at the right times in the market. Why do people invest in real estate? Typically, it's between one of two things. You want to have an asset that provides you cash flow every single month, and that is paid for by the tenant. The cash flow doesn't exist anymore in Toronto or Vancouver unless you're putting down, I think, like 40% down payments, probably like the break-even point. Maybe you could probably tell me
in the city, in most areas, especially with short-term rentals not being a thing, most of the cities, you're right.
Okay, so 40%. Okay, so you can get cash flow in Toronto, but I would argue it's manufactured cash flow because you're putting down a larger amount of money. Okay, so that's number one. But cash flow in Vancouver and Toronto hasn't really been the reason people have invested, even in the last 10 years. The second thing is the capital appreciation of the asset. You look at the price you pay for it, and leverage is a beautiful thing when prices go up. As we've learned, it is a very, very scary thing when prices go down, depending on what you bought and the timing of when you bought it. If you have that risk tolerance, then yeah, of course you buy for capital appreciation. Now, even if we have a modest, like let's say you're buying a piece of real estate right now, and the 40-year average is 6.5%, I would put in my graph, my spreadsheet, I would put 2.5% appreciation per year. That's all I would put. I'd be like, okay, Bank of Canada wants inflation to get down to 2. Historically in Canada, house prices have beat inflation. It's not adjusted for inflation like it is in the States. But we have beat inflation over a period of time. So it's like, okay, so what's realistic over the next 10, 15, 20 years? And then there's buying real estate to live in, and there's buying real estate as an investment that you're never going to move into that property for, right? So my mindset has now changed, and interest rates have completely changed the conversation on everything here. Like right now, there's not many investors like drooling, thinking about getting a property at a 6% interest rate for the next 5 years with the maintenance fees in these condos. And even though rent prices have gone up, it's nowhere near. You're going to be negative $1,500 a month, right?
Yep.
So you got to ask yourself, okay, well, why am I doing this now? Am I doing this because of the hype of the last 10 years, which probably isn't going to be the same level for the next 10 years? And so, long story short here is my mindset has changed. I do own 4 properties across Canada. I've invested in real estate, but I used to think about properties as I literally I had a note on my phone, like where I would have my property and what I paid for it, what the mortgage is down, and what I believe a conservative value today is. And I would have a tally at the bottom and be like, this is your net worth just based on real estate assets, right? Equity. And frankly, that helped me sleep at night because I'm like, shit hits the fan in my life. I can sell one of these things and I'm okay. I can sell 2 of them. I'll have to start from the beginning again, but it'll be okay. Now the mindset's changed where I don't even care how much of it is paid off, how much of the equity is in it. All I care about is that in 20 years, because all of them are about 5 to 7 years into the mortgage amortization now, when these things are paid off, what could rent be in 20 years? It's going to be higher than it is today. Okay, so if I have 4 properties now, and let's say there's a world where all these are paid off, because they will be one day.
Yep.
And I'll be in my mid 50s then, I guess. No, early 50s then in 20 years. We'll be 52 in 20 years. If these 4 properties are all in that position, how much cash flow will come to me every single month just from these things just being there? Let alone everything, the value of the property, the fact that helps everything. How many of these would I need? And I do recognize that there'll be some people listening to this that think that like you can make money in Canada, but if you make money in real estate, you're a bad person. Like I fully recognize that some people have that opinion, but this is what I know. This is what I understand. This is what I'm going to invest in. So if I look at investing long-term, if you're going to get into the market, I would have a 20-year horizon. This is a set it and forget it. There is zero about this that is sexy. It is very boring. There is hurdles along the way. Tenants can cause problems. You are taking on a level of risk with any investment that you have. But you kind of have to look through the bumpy waters of right now. Like 2024 is going to be an interesting year for, everything that's happening. I know they're putting in like the mortgage charter of rights or something, or I don't know what they're calling it. And they're going to try to help people in bad situations, but there's going to be some people that have no choice, but they have to sell, or they're going to be tough. They're going to have to declare bankruptcy. It's going to be bad. I agree with all that. There's going to be pain in the market moving forward for the next 18 months. Anyone that says there isn't is not looking at the numbers.
Yep.
Right. Now, when you get out of that, then what happens? What's happening in 10 years? Regardless of what the government tries to do, and I know we all make jokes about them, I think they have decent intentions at the end of the day. If immigration levels keep up, it's going to be a shit show in 10 years. Real estate's not going cheaper in the urban markets in Canada. So I've now shifted to I'm buying these, I'm holding them long term. That's all I'm focused on. And throughout the next 18 months, when there is uncertainty, I'm going to look for my next opportunity. Because I know the interest rate's going to suck today, But in 5 years, it will suck less, you know?
No, I agree. I mean, we all know the quote from Warren Buffett in terms of being greedy when others, what is
Right.
it again? Anyways, you know what I'm
Fearful.
talking about.
Yeah. Yes.
Thank you.
Yep.
And fearful when others are greedy. But, and that rings true right now. And thank you for that, first of all, because I made some good notes, so there's no buts. However, my question as a follow-up to you is, in the midterm, seeing this interesting, and I think that you just brought this up, seeing this interesting point of people who invested based on the idea that property was going to continue to appreciate at an 8 to 10% amount every single year. Well, we're seeing a mass sell-off of these properties. Yeah. My first thought or question to you is, do you think that this, A, floods the market for opportunities? So that's my first question for you.
Yes, I do. Yeah. It's already happening here with Toronto's condo market. I had never looked up this stat before because I never thought it was something that would need to be looked up. But I looked at all the active condos for sale in downtown Toronto. We have 7 months of inventory, which basically means 14% of those condos for sale are going to find a buyer every 30 days. And if no new listings came to the market, it would take 7 months for all of them to find a buyer. Like, that is firmly buyer's market territory.
Interesting.
So that's not something, I don't know if that's always the way it was. Well, no, it certainly wasn't with inventory, but then it's like, who are selling these things, which I think is really interesting.
Yes, and that was going to be my follow. That's a great follow-up question to you, is who are the people that are selling off these properties, Tom? Please tell us.
So yeah, I mean, like, as of the last time I looked, it might have changed, slightly in either direction, but roughly about 75% of active condo listings in downtown Toronto are properties that are tenanted. That was about 33 to 35% of them.
Okay.
But the biggest one that was glaring to me was vacant. 40% of active condo listings were vacant.
Crazy.
And I'm like, okay, so now vacant doesn't always mean it's an investor selling it. Like, we've had some people that choose to buy first because they can close on the next property, and then they move out of their place and we sell it vacant, and they're not an investor, but still a good chunk of that. So, 75% of active listings are potential investors trying to get out. Right. That's going to put that's downward pressure on prices for condos.
So it puts downward pressure on prices. A lot of these are not rented out. Do we see downward pressure on rental rates for that reason as well?
Not yet. No, that's the one thing that hasn't changed. I saw a chart the other day that showed like the CPI index and rental rates and how it was almost like exactly on the same level, where things have kind of dropped down for prices. But the ownership of real estate, you could argue, is more expensive than it's ever been before because of where the interest rates are at. And the rental market is the rental market in 2023 was kind of like the sale market in early 2022. 10 offers for a rental. And it was nuts. Now, it has calmed down a bit into the end of 2023, but there's no real... renters kind of got stuck the worst here, I think, honestly, since the beginning of everything in 2020. I think renters had it the worst.
So, I mean, we gave a lot of reasons why people should not buy real estate as an investment right now, but also we didn't.
Yeah.
For someone who's now, okay, so I think the first thing is I've noticed that there are a lot of quote unquote of those investors that you're seeing. We're seeing them locally too, selling off all their condos and so forth. And a lot of them, that was their second property. They're what we call like the amateur investor. And they were in, someone got them excited. They looked at the numbers, but for whatever reason, they're getting crunched. Maybe the rent wasn't high enough. Maybe the mortgage rates went too high, which unfortunately impacted a lot of people. Cost of living occurred, like all these different things that happened. So if I'm somebody entering 2024, and whether or not I got burned, why am I going to step back into that same market that so many people just got burned from? And what would I be planning to do differently if, well, I guess you, in this case, were to do this from the beginning all over again? How would you approach this differently?
Yeah, I think like the uncertainty in the market is going to separate the amateurs from the professionals, right? Like in anything. And that's what you're seeing right now is the people that don't have the long-term perspective or over-leveraged themselves or took out a line of credit to buy the second or third property. They're the ones that are going to feel the pain. So you have to look at it right now, and you can go in any market. There is opportunity, right? And this isn't like a sales pitch. It's the truth. There's opportunity in any market. So there will be a point where prices get to a point where rent is here, where I look at it and I go, okay, And the one thing that's interesting is that, we sell a lot of condos. We represent the sellers. We see that we actually, not just what the numbers are saying and like the sale prices, but we see the number of showings on the properties. I haven't seen showings have actually picked up the last 2 weeks. People are out there viewing things. They're just now, and by the way, this is their right to do so because it's been the other direction for so long. They're just taking more time to make a decision because now they have more options to look from. It's been the opposite way for the last 5 years for Toronto real estate, where the seller kind of held all the cards. Well, now the buyers hold the cards. So if I was someone starting from scratch, I think the people that are going to feel it the most that are going to get burned are actually people that bought pre-construction condos in 2020, 2021 that are closing now because they might not even appraise. They're certainly going to be cash flow negative. They paid a premium to buy them at that time. And I've talked openly against pre-construction for years on my YouTube channel. I've always been a resale guy. I think it's a safer way to do things. But I think it's just like the lessons that we can learn is, okay, most people bought when money was silly low because the numbers made sense. And you would know this better than me, but for qualifications, before the rates really started pushing up, because the fixed rate was already fairly higher than the variable at a point in time there, like halfway through 2022, that most people took the variable just because they made sure that they could qualify for more, right? I would guess that was what was happening. Or, probably not too many. Maybe these days people are actually taking variable again, but there was a zone there where it was probably all fixed rates, like 3-year fixed maybe. But if you can find a way to keep it, even if the value doesn't go up, if you've got equity pay down, and I know mortgages that start right now with 20% down based on today's rates are probably like 70% interest in the first few years, right? So be aware of that and look at it. And if you're waiting, just acknowledge what you're waiting for. Are you waiting because you think rates will continue to go up, which will cause prices to go down? Okay, then just run the numbers. If the rates do go up, do you qualify higher than that? You're being stressed at 9% now. Are you going to qualify for that? Are you waiting for all these fixed rate renewals to happen? You think that's going to flood the market? Well, it seems like the government of Canada is trying to stop that from happening with all their new measures. So, I've kind of gone away from I think investing in real estate is great because I understand it and I know it and I really truly believe in it long term. But I also don't think it's for everybody. I think there's some people that overanalyze everything, and if one little bump in the road, they're going to get scared and get out of it, and maybe it's not a good idea for them.
Definitely agree with that statement. We saw that it was, you would know this as well, and there was nothing wrong with this, but it was like quote unquote sexy to invest in real estate or buy a secondary piece of real estate for a couple of years. And obviously in the real estate side of things, you're looking to find the piece of property that matches their objective goals, and they make a decision yes or no. On the mortgage side of things, same thing. Does the financing make sense? Does it work? And we may or may not have, I know on my side, we have the conversation. What's your worst case scenario? What does that look like? Right. Can you hold the property? What are the things that you can do? But we also know that, unfortunately, there's a massive group of people that were underrepresented. And so I think that speaks, in my opinion, to two things. One, I think, and tell me if I'm wrong here, if somebody's planning to go forward into 2024, I think real estate, it could probably still be an unbelievable investment, probably better than ever, because there's just less people out there doing that, and there's still a massive building issue. But the second thing is, I wonder if we see, and if we are seeing the fall of the amateur investor, if that's going to go by the wayside. What are your thoughts on that?
Yeah, I would agree with that 100%. I think when people get burned, it stops the next group of people from wanting to do that thing because they saw what just happened, right? So I think absolutely the people that are just kind of on a whim buying a second property, don't truly understand what they're doing, you're not going to see a lot of that. I will say there are, and again, these are investors with mortgages. I think a lot of people would actually be shocked how many people have a lot of money and are buying big cash down payments. For them, I understand waiting because it's like, yeah, you're actually getting the difference because you don't have a mortgage at 6% or something, right? So yeah, I would 100% agree with what you just said.
So with that same vein and that same thought, okay, we've seen so many people get burned. We hear, and I see, you see it, obviously, unfortunately, through the YouTube channels and so forth, and the comments and so forth. There's a lot of just general consensus and negativity, and it kind of surrounds people. How does one, in your mind, if you're talking to someone who's, early stages, just thinking about this idea of investing, like, how do they wrap their head differently around this concept or this idea of even picking up or buying real estate? Should they be buying, in your opinion, somewhere like a city like Toronto, where there is not much in the way of cash flow and you have to put a chunk down? Should they be stepping outside and looking at different cities or communities? Or should they back off and just say, you know what, maybe real estate isn't the right consideration for me going forward? What are your thoughts on that?
Yeah, I mean, I think the simple question for anybody that's thinking that is asking them what does success look like to you?
Great
In
one.
this,
Great
in
question.
what you're doing here, what to you would mean that this worked out? And then taking that feedback and then trying to give advice based on that feedback.
I love
I
that.
know that's simple, but that's probably the
No.
answer.
That's one of my favorite questions of ever. And you mentioned it earlier on, so I don't know that you have to even repeat this, which was invest in what you know, invest in what you like. And time and time again, we've proven that real estate is an incredible investment. You just have to take the time and the energy to really research it like anything else and understand it. You yourself admitted that in your early days of buying real estate, that it was you had a different mindset or approach around it, but that's shifted to a more long-term peace of mind or a long-term way of thinking about it. Is that right?
Yeah, I bought my first condo, traded up to the second one, sold a few of them along the way to make other things happen, and really financially didn't over leverage myself, but certainly kept building. I was like, I don't care if I refinance this one because it's going to get me the next one. And I'm thinking it, and you learn lessons, and I didn't go through any major downturn and until I guess recently. I don't know if maybe it's a correction. I don't know if it's a crash, but what's happened with the market. And I think that was good to go through. And now recognizing that it's not just what you're good at. Well, sorry, you can be passionate about something, but you got to be good at it. So it's like, if you're passionate about real estate investing, that's great, but are you educated about it too?
I completely agree.
So thinking of it that way is probably the shift in my mindset, where now it's almost like a set it and forget it. I own these things. They exist. They are there. At some point they will be paid off. That sounds pretty good to me.
You made it. Hey, Tom, on accident, you made a really good list of things that people should be thinking about and kind of moving forward. I don't know, maybe it wasn't on accident. You might have had this on mine. So the first and biggest thing, someone is considering the real estate space or making more money or trying to figure out how to get involved, you mentioned was going through the upskill. So essentially spending time on programs, information, education, YouTube, listening to this kind of stuff. The second thing that you brought up, and you've brought this up now at least 4 or 5 times, is the long-term mindset. And amen, brother. We're on the exact same page on that piece. It's no different than buying a home to live in from a perspective of, hey, if you can't live in this home for somewhere between 7 to 10 years, you shouldn't really consider an investment. It's just a place to call home. And if it goes up in value earlier, cool, you might have done well, but it wasn't on purpose. It was just the nature of what happened during that time. The other thing that you brought up, which is a piggyback, is investing in what you know. I've told many people, I think, that I don't know that real estate is the right investment for you right now because of the information that you have. Here are some ways that you can learn about it, but for today, maybe consider an alternative because it just doesn't seem like you have the information to go forward with. And that's not a challenge or to put someone down. It's just a suggestion that I don't want you to put yourself in a bad place, right?
Yeah, I mean, if you're good and passionate about the stock market, then invest there instead.
Yep.
But just do something with your money, so that it doesn't just sit in a savings account. Even the GICs are pretty good right now. They're like 6%, but they're good for now because of course they are. Of course they are. They're good for now, and then they won't be so good. So it just depends on what's happening in the world and what makes sense for you. And it depends on what stage at life you're in as well, right? Like, if you've just retired and you never invest in real estate and you have your principal residence, but you want to sell that one day and cash out. It's like, well, what do I do with that money when I cash out? Do I buy 3 condo investments? Like, probably not. Probably you invest that in a safer way for your retirement, right? So I think it just depends.
You're absolutely, I couldn't agree more. Where are you at in your life? What are you good at? Where do you want it? How interested are you? Do you need to be liquid? Do you not need to be liquid? These are the things you need to be thinking about. The other one that you brought up, Tom, making a list here for you today, worst case scenario. What is your worst case scenario? Yeah. A rule to live by in virtually every investment circumstance, and something that for most people, again, they don't really think about it. So I think that was a key thing to highlight. And, planning towards their 2024, 2025 goals. Thank you for saying that, because I think that's massive. How would you contextualize that in your world if you were to talk to someone about real estate as investment? What's your worst case scenario?
There's a few ways to look at it. Is the worst case scenario that the property goes down in value to a certain point and then you're underwater because it's not even covering, the down payment? That's not a great scenario. What's your option there? Well, you sell it for a loss, or you just keep paying it. You just keep paying the mortgage and you just wait, and just time goes. Then there could be the cash flow worst case scenario. I can deal with negative $1,000 a month because long term I'm looking at the appreciation of this asset. But if it gets to $2,000 a month, that's really impacting my lifestyle, and I can't deal with that anymore. So I think it's just being very clear on like what that would look like for you. But just keep in mind that everybody's doing things and making comments on the now and what's happening right now. And if you just look at fundamentally, I'm not talking about all of Canada. I'm not saying you're going to buy a house in Edmonton, it's going to be worth double in 10 years. I don't know that. What I do know from my market in Toronto and Vancouver is pretty much the same. Is like, we don't have anywhere else to build. We're building upwards, right? Even with everything new that the housing minister Ravi brought in for you guys, it's not going to happen overnight. Yeah, people will build more properties and there's more regulations coming down. So if you look at our immigration numbers, even if the government hits all their targets on affordable housing and building more rentals, what the government's trying to do, and I'm not putting them down for this, they're trying to find affordable options for people to live in Canada, that is mostly renting. Mostly rental options is what they're building. That's great. But for me and for the people that I talk to and the people that are in my circle, it's like, I'm focused on the ownership of the asset. So just really, I'm repeating myself here, but I don't care what happens in the next 2 years. I'll deal with it. And then in 5 years, I'll be happy I didn't sell those things. And in 10 years, I'll be even more happy. And then 20 years, I'll be really, really happy. So it's kind of how I look at it.
Good points and well said. There's tons of value, tons of information in there, Tom. Really appreciate all of this today, man. And more than anything else, just giving your opinion and your feelings on what you expect to happen and what could occur, because I think that someone's going to listen to this today and take action, even if it's just one person that gets motivated to buy something, invest in something, do something, change your life. These are the conversations that really freaking matter. So I'm glad that you found a way through that sandwich to bring the energy today, man. Appreciate that. Hopefully it was a good PB&J.
It was great. It was great.
Awesome. Well, I'm going to put all your information in the show notes so people can find out where you are. I know you got the YouTube going on. You got the podcast going on right now. Anything else big in the works right now that's coming up, Tom?
I don't know, man. Just trying to be a good dad, trying to focus on life outside of work and spend time with my family. That's really where things are at these days.
Kind of an important consideration, man. Well, good luck with the rest of the hockey games there, I guess, for the next, I don't know. I get the whole season to go, don't you? So
yeah, a few more. Yeah.
All right, buddy. Appreciate you. Thank you so much.
Okay, cheers, man. Bye.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.